Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 21st of December 2019 and we are providing our gold and silver weekly update for the week ending the 20th of December. Gold rose $3 last week from $1,475 to $1,478, having hit a high of $1,481 and a low of $1,470. In sterling terms, gold finished the week at £1,136. That's up a creditable £30. And in euros, it closed at €1,334. That's up €7. Silver rose 25 cents from $16.94 to $17.19, having hit a high of $17.26 and a low of $16.89. In sterling terms, it closed at £13.22. That's up 51 pence. And in euros, it closed at €15.52. That's up €0.28. The gold to silver ratio fell from 87.1 to 1 to 86 to 1. The Dow Jones closed on Friday at 28,455, up 78 points on the day and up 320 points on the week, again hitting all-time highs. And the Nasdaq closed at 8,924, up 37 points on the day and up 190 points on the week. And the S&P 500 closed at 3,221, up 15 points on the day and up 53 points on the week. Again, another incredible positive week for US equity markets. Brent crude closed at $66.14, up 92 cents on the week. And WTI crude closed at $60.44, and that's up 37 cents on the week. The dollar index stands at 97.69. That's up 0.52 for the week, and remedying last week's decline. Now, we ended last week's video podcast with the following comments, quote, "Meanwhile, though, we would not be surprised if momentum continues on Monday with slightly higher gold and silver prices. However, we should not forget that certainly over the past 5 years or so, gold and silver prices have tended to dip in December, only to recover again in January. Will the same happen this year? Let's wait and see. But do not be surprised if it does." Well, on opening, gold went down slightly for around 4 to 5 hours and then rose above its opening by a few dollars and frankly oscillated thereafter within an $11 band all week, closing just marginally up on Friday. Trading volumes, though, were relatively low, and from a technical analysis point of view, gold is what they call at the top of a downward trend channel, and as stated last week, could equally move in either direction. To be fair, though, the trade news last week was relatively positive, with manufacturing and services PMIs more or less on target, and GDP growth for the third quarter being slightly upwardly revised. Consumer spending rose in November to 0.3%, compared with 0.1% increase in October, and nominal personal incomes rose 0.5% in November compared with October, providing a median gain of 0.3%, with wages and salaries advancing 0.4%. So all in all, pretty good news, and yet gold still managed to hold ground, which is interesting. And we shall comment on this more in our video tomorrow. Now, perhaps what we should note, however, is that we are now entering the holiday season and volume is likely to be light, meaning that, first of all, there's going to be a distinct lack of news, unless it's geopolitical, and that any news given, either positive or negative, could indeed have a disproportionate impact, thereby not really suggesting a clear guide as to where it will be heading into the new year. Now, silver, like gold, oscillated last week, but within a slightly wider range, percentage-wise, of about 37 cents, closing quite strongly on Friday and above that psychologically important level of $17. Again, as with gold, the China-US trade deal is the most poignant factor. And whilst all sides are issuing good headlines, positive headlines, the deal has not as yet been signed. And it does look as if now, from the announcements made, it'll be delayed into the early weeks of January. And so this uncertainty will continue to have some supporting influence on precious metal prices until the ink has been cast on the parchment, as it were. Do they use ink and parchments anymore? I'm not so sure. Anyway, from a technical perspective, the silver price stands above both the 50 and the 200 EMA indicators, as we suggested last week, and this is deemed bullish by traders. But we caution again to beware, as this is still relatively low volume. So let's take a look at what economic information is due to be released this week. Though, of course, with Christmas being slap bang in the middle of it, it's going to be difficult to get too excited. On Monday, we have new home sales for November. Tuesday, durable goods orders for November. Probably the most important piece of news for the week. Wednesday, nothing scheduled as it's Christmas Day. Thursday, weekly jobless claims. And then Friday, nothing scheduled. So really, none of this is likely to have any major impact at all. What is noticeable about this past week is that the Bank of England kept rates on hold at 0.75%. And this has kept the pound from slipping further against the dollar, which has performed quite disappointingly after the UK general election where the Conservatives won. Because prior to that, the pound had soared to $1.35 and now stands at $1.30. But, unlike the shifts of this world, we still maintain that the US dollar is still comparatively strong and will be so for some time into 2020. Now, what we have planned for tomorrow is our end-of-year gold forecast, and on Monday, our end-of-year silver forecast. Now, we appreciate that it is less than 10 days to go, but it will be interesting to see how our forecast compares with our earlier predictions, and we will reveal those, and also what we believe, and this is more important perhaps, what is likely to happen once the new year begins. Now, meanwhile, this past week we have published a series of quite important podcasts setting the stage for the coming months, and we've listed these with links in the description box below. And also later today, but it may be a little too late for UK listeners by the time it is published, we shoot the breeze with controversially Greg about sterling versus the dollar, the next stage for the US versus Europe, and the UK, and whether there are any political lessons that the US Democrats can learn from their socialist counterparts in the United Kingdom, because as far as we can see at the moment, it's almost a foregone conclusion that the Republican Party will win the next general election. And so, Democrats may be looking across the pond to see whether they should change their positioning, and certainly some of those standing for president, if they hope to gain even the slightest chance of winning that election. So, if you are awake when we publish this and don't mind being bored by two old duffers discussing the future of our countries, then please do tune in. Finally, we shall be producing YouTube video podcasts all of this week, except Christmas Day. The economic news will admittedly be sparse, but there could be a few political issues raising their head, and we're waiting to hear about the North Korean Christmas present that Kim Jong-un has been promising. Also, we have no doubt that even though President Trump will be en route now to spend his Christmas holidays, we're bound to have the odd tweet or two upon which we can certainly comment. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.